Hello, so this says 8 tips for paying off student loans fast. While some may argue that you can't put a price on a good education, many of today's graduates face the grueling task of paying off student loans while trying to save for a house, pay their bills, and start a family. If you're feeling overwhelmed, there are a few ways to pay off your student loans quickly. So 8 ways to pay off fast. Some of these strategies to pay off your student loans fast include make additional payments, establish a college repayment fund, start early with a part-time job in college, stick to a budget, consider refinancing, apply for loan forgiveness, lower your interest rate through discounts, and take advantage of tax deductions. So 1, make additional payments. If you can afford it, make larger payments to cut the principals more quickly and reduce the total payoff time. By reducing the principal balance, you're minimizing the duration of the loan period and the interest secured. For example, a $25,000 student loan with a 6.8% interest and a 10-year payback period would cost $288 a month. Using a student loan calculator, you can see that paying $700 a month instead of $288 enables the borrower to repay the loan in just over 3 years. Another strategy is to add payments, sending in checks every 2 weeks rather than monthly. Just be sure to advise your loan servicer to apply your extra payment to your principal balance rather than your placing your account in a paid ahead status. This will allow you to pay down your principal balance more quickly and save money on interest. 2, establish a college repayment fund. If you're not sure how much more you can devote to your student loans every month, set up an automatic transfer to a separate savings account specifically for college debt. Transferring money automatically into savings is effective because you won't be able to spend it on something non-essential like clothes or dining out. 3, start early with a part-time job in college. Getting a part-time job while attending college is one way to keep college debt in check, because you can use those earnings to get ahead and start on paying down all your balance. Let's say you're able to work a part-time job that allows you to put away $500 a month. In a year, that's $6,000 you can put towards paying off your loans. What's more, you can earn up to $6,970 a year without affecting your eligibility for need-based financial aid. 4, stick to a budget. Not knowing how to manage finances properly can prevent students from paying off their student loans quickly. That can lead to delays in pursuing more fulfilling financial goals. By planning and understanding your monthly cash flow, you can make some necessary sacrifice to avoid falling off the budgetary wagon. 5, consider refinancing. If you're not sure how to pay off your student loans quickly, or if it doesn't seem feasible, you may be paying too much interest. In this case, you might want to reconsider refinancing your loan for a lower interest rate or a shorter repayment period. While refinancing federal loans with a private lender will cause you to lose some federal benefits, it can also allow you to pay off your loans faster. Timing is key with this strategy. Your credit score is typically going to be at its lowest immediately after graduation, which generally means that the interest rates you're offered will be higher. 6, apply for loan forgiveness. Forgiveness programs can eliminate part of your student loan debt, but each program has unique requirements and strict approval standards. The most well-known program is Public Service Loan Forgiveness. To be eligible for this program, you must be employed full-time in a public service position by a government or nonprofit organization and make 120 qualifying payments under an income-driven repayment plan. Getting approved for the program is difficult, so read through the details carefully to stay on track. There's also the teacher loan forgiveness, which I mentioned in another video. 7, lower your interest rate through discounts. Most lenders will offer a 0.25% or 0.5% discount if you set up automatic payments on your loan. In addition, private lenders may offer other interest rate discounts if you meet certain criteria, like making a certain number of on-time payments or taking out another loan of the same company. And then finally, 8, take advantage of tax deductions. The federal government offers a student loan interest deduction on your taxes for interest paid during the year on qualified loans. The laws allow you to deduct up to $2,500 depending on your adjustable gross income. The deductible is always available for both federal and private student loans. You can claim this tax deduction if you're legally required to pay interest on a qualified student loan, and your filing status is not married, filing separately. There are also adjustment gross income limits for this program, which are set annually. You do not need to itemize the claims for your deduction. So, how long should it take to pay off student loans? It typically takes between 10 and 30 years to pay off student loans balance. But the time frame varies by individual and is impacted by several factors, including interest rate, total balance owed, borrower's annual income, and repayment plan. If your total student loan debt at graduation is less than your annual income, you should be able to repay your student loans in 10 years or less. The average student loan repayment term, however, is 16 years. So that's it for this video. Thank you for listening.